Hey everybody, it's me, Mickie, with
Marshall, how you guys doing?
We're so excited today. We're here with Money Matters because money matters. And today our episode's all about how's the market doing? And this episode came about because Marshall and I were chatting about this the other day. And we were talking about because of our backgrounds. I mean, we all work for Clarion Advisors, right? We're with Clarion Advisors. But when people ask us about how's the market doing, our brains end up going into different directions. We notice. So like for me, background real estate. So when people ask me how's the market doing, I immediately think real estate. And so Marshall, what do you think of when people ask how's the market doing?
Well, my first thought is what market are you talking about? Because in my mind, there's more than real estate and the stock market. There's a lot more markets in the world. And, by default, I kind of know what they're asking, but I will ask that question a lot of the time. What market are you talking about? Right?
Yep, absolutely. And so that's what we discovered. So we started chatting a little bit more about that and thinking, oh my gosh, if this is true for us, it's got to be true for so many others. So we decided to put together a little market cheat sheet for all of you, and you'll be able to download that or actually just reach out to us on our website and put in market cheat sheet at this address. You can see it in the ticker down below, and we'll be more than happy to send it out to you. We'll bring it up on screen a few times for you today as well. But let's go ahead and dive on in. So there's a lot of different markets like Marshall was mentioning. So one of the ones that comes to mind, Marshall, is the bond market. So can you share a little bit more with our viewers and listeners about the bond market?
Yeah, sounds exciting, huh? The bond market.
Yeah.
They call the people that work in the bond market the bond ghouls because they tend to get happy when things get bad, which is kind of a strange way to go about it. But the bond market is where all the debt in the country and in the world sits. Now, I ask people from time to time, what is a bond? A lot of people don't even understand what a bond is, but you know what a physical bond is, right? A bond in this context is a debt. And so, everybody knows the U.S. government is in a lot of debt. How did that happen? Well, they issue bonds, U.S. Treasury bonds. And so you could give the U.S. government $100 and they will give you a $100 Treasury bond. And so the duration, the time of that loan to them is, could be 1 year, could be 5 years, could be 10 years, could be 30 years. So that's the duration. And then after they pay you interest every year on the bond, and then at the end of 10 years, they give you the money back. So that's the way a bond works. And so the way that the U.S. government has gotten into trillions of dollars in debt is by issuing bonds. And so the U.S. government is not the only entity that issues bonds. Corporations issue corporate bonds, right? So even as successful as Apple Computer is, you could buy a corporate bond from Apple Computer. You could buy a corporate bond from Walmart. And basically what you're doing, you're loaning them money, and then they're giving you a bond and they're paying you interest. And then they give you the money back after a duration of time, a length of time. And so what's interesting about the bond market is it doesn't get any attention, but everybody's affected by the bond market. So people have mortgages on their house, Mickie, right?
Mm-hmm,
Real estate.
Oh, yeah.
Right? So where does that mortgage sit? It sits in the bond market. It's a bond and they put it together. And so when you pay your mortgage, part of it goes to principal, part of it goes to interest. It goes to that bond holder and they get paid. You're paying them for holding that debt for you. And so that's a little bit of way the bond market works. And so it's an interesting market. It's huge. It's a lot bigger than you think. And there's all kinds of bonds. Like I said, U.S. government bonds. There are municipal bonds, right, for roads and bridges.
I was going to ask about that. Okay.
Right. There are, like I said, corporate bonds. There's all kinds of different things you can buy in that world.
Marshall, if with all those different kinds of bonds, how would somebody go about investing in those? I mean, what do they do if they're like, oh, hey, I want to invest in a corporate bond because I heard Marshall talking about that. So I want to invest. Okay. How do you do that?
So back in the day, you had to actually buy an individual bond, right? And you were nowadays you can use a fund, either a mutual fund or an exchange traded fund. So we typically don't buy individual bonds, but we buy them as a fund. And so what happens is the fund manager manages the process of buying and selling the bond, and you buy the fund. And so you can buy a corporate bond ETF, exchange traded fund. You could buy a 10-year U.S. Treasury bond or a ETF that has U.S. Treasury. And so you can buy an ETF with the type of bond that you want.
So do your clients ask you, do they let you know, hey, I want to buy a bond and this is how, and this is what I'm interested in investing in? Is that,
they typically don't get that. They typically don't get that detail. They leave the detail to me to choose.
Okay.
What area is going to be, most people, don't even know what a bond is, honestly. So they leave it to me to decide where's the best place to be. Because, we're going to talk about other markets in the world, and we use other markets as a way to diversify. And so the idea of diversification is when one zigs, the other zags. And so they go against each other to give you stability and diversification. The idea of diversification has been around for thousands of years. It's actually in the Bible. In Ecclesiastes says something about spread your wealth over 7, not or 8 areas. It actually says that.
Really?
It really does.
That's amazing. Diversification.
Diversification. And everybody's heard this, and you should know this, Mickie. You don't put all your eggs in one basket.
That's right.
Right?
Yeah.
Right. You got chickens, right?
I do have chickens.
You got chickens. So you coming back to the house, you don't put all the eggs in one basket, do you?
Of course not. Most of the time I don't have my basket with me. I forget it. So I'm stuffing them in my pockets.
Yeah, there you go.
I don't have them all in one pocket.
Don't put all your eggs in one pocket.
That's right. They'll crush. That's right.
So anyway, so bonds is an alternative, but it's not the most exciting place in the world, but people do well in that area. Really do.
Well, I've heard about commodities too, the commodity, the commodity market. And isn't that a little bit more exciting than the,
it is. It's a lot. If you like volatility, you like stuff that goes up and down a lot.
Yeah. Okay. Yeah.
It is. And so the commodity market is enormous. You think the stock market's big? I had some numbers. I had pulled some numbers out on this. But the U.S. equity stock market is around $50 trillion. Okay, 50 trillion is the value.
That's a lot of eggs.
That's a lot of. That's the stock market, right? And so it's huge. The commodity market is like twice or more the size, because in the commodity market includes oil and gas and gold and silver and eggs,
and
right?
Bacon, right?
Bacon and pork bellies and all of that stuff is in the commodity market. So you think of all the food we consume, all the energy for our vehicles is in the commodity market. And so we can invest in that area. We don't invest specifically in wheat because of the volatility. I watch the prices of all these kind of markets each week. And if you want to see the biggest swings is the commodity swings. You'll see the S&P, up 1% or 2%, down 1% or 2%. But commodities, you'll see wheat, is like up 8% in a week. I mean, it's very volatile.
It's amazing.
And you do need to know what you're doing to be in that space. But there are times when the stock market's not doing well, the bond market, but commodities are being driven really well, especially in inflationary periods of time. So
to that point, are there particular times of the year when you see more of the swings? Like, for example, since so much of that would be food source and everything, there's a lot of, I'm thinking harvest time is what I'm thinking. So, I mean, does that have anything to do with the swings or no?
It can, yeah. And it has to do with what's going on with weather patterns and everything. I mean, honestly, I'm not an expert in the commodity market. And it's, like I said, it's huge, and people are trading those commodities all the time. Farmers are trading using options to get paid and lock in their price before they plant even. So the commodity market's a very interesting place. But there again, people ask me how's the market? I'm thinking, wheat market? What meat market are you talking about?
That's
Right?
so funny. Yeah. And then,
So
you mentioned that's a really interesting place, but of course, my favorite market is, and you know this very well, is the real estate market. That's my
right.
favorite market. That's my go-to market. And I just live and breathe that. And I know that you have some really strong information and feelings on, or I should say, thoughts on where people should invest in real estate, and that they shouldn't just stay narrow-minded with real estate, that they should expand their horizons. And we've had some really good chats around that. And
Yeah.
I would love for you to share with everyone a little bit more deeply
Well,
about the real estate
tell
market.
me when people ask you about, they're talking about local residential real estate, right? When they ask you about a market, correct?
Well, for me, it can be both residential or commercial, but
Yeah.
I would say predominantly residential.
Right.
Yeah, that
Right.
would be,
Exactly.
I'd say 9 times out, maybe even 95 times out of 10.
Yeah.
I mean,
Yeah. And so
100.
as an investor, you can buy residential real estate, or you could buy commercial real estate.
Mhm.
But there again, are you going to buy it, directly, like buying a bond directly? Or are you going to buy wheat directly? In our world, we tend to buy it within funds. And
Yeah.
so most of the time when we're buying real estate in our allocation, it's commercial real estate. And so
Yes.
commercial real estate, we think of it in 4 key sectors: industrial, office, retail, and apartments.
Mhm.
Right. And so there's lots of economic patterns around that. So like office, when the job cycle is good and office supply is tight, office is a good place to be. Right. Apartments, right? When people start losing their jobs and they can't pay their rent, unemployment goes up, apartments tend not to be as a good a place to be. And so traditionally, as investors, we don't invest directly in residential real estate. That's primarily, single family homes and stuff like that. But, ever since the subprime crisis, there have been funds that buy big, pieces of residential real estate and they rent them. And so that's
Mhm.
becoming more of a market
Right.
that as an investor we can get into, other than buying a single family home. And
Right.
so that's one way that we look at it. We look at residential, that as well, but we look at the commercial and the broader sectors in the economic cycle.
Yeah, I love that you point out that there's that whole commercial side that a lot of people forget about when they're investing. And I'm big on investing in residential as well, and trying to invest in particular properties that would be cash flowing for people.
Right. Right.
And I think it's a great way to get your foot in the door with investing in real estate. But I'm so glad that you're mentioning the commercial side of it, because that is a huge side that a lot of people, I think that they just don't know as much about.
Right.
Many people
Right.
don't know as much about, and so they don't realize that they too can
Yeah.
dive into it, and it's really
Yeah,
exciting.
So I have clients that love real estate, and the stock market makes them totally uncomfortable. And I don't know if I've told you the story about clients I have. They were a commercial contractor and they're retired now, but over their career, they've bought 17, 18 homes free and clear here in California.
Mhm.
And so their hobby is to go out and work on them, right? And fix them and rent them. And they just go to Home Depot. They do the whole thing themselves, right? And they love it. It's kind of their
You
hobby.
talking about me?
No, I'm not talking about you.
I know you're.
But,
I know.
their stock accounts make them extremely nervous because the price changes every day, and they can log into their computer and they can see the price change. And they'll say, "Oh my gosh, I've lost $5,000." I'm like, "Well, what about your residential?" The thing people like about it is they can't see the price change every day, but it is changing every day.
It is.
It is changing, right?
It is. It's a more of a sense of I don't know if comfort's the security, I guess, because you don't see the fluctuations every day, like to your point. Yeah, absolutely.
But that gets to the psychology of investing and stuff.
Sure.
I mean, when you don't look at it every day, you feel more safe and secure. But and that's the reason people like real estate a lot of times. They don't have to worry about it. The downside of it is you're going to get upset with me. The downside is it's what's called illiquid, which means it's hard to sell when you need to sell.
Yeah. I
Right?
agree.
So as an investor, it's okay to have illiquid assets. You just want to make sure you got to, you're diversified. You don't have too much in illiquid in case you need cash or need to do something different. So.
And I'm agreeing with you. It's I don't think of it. I know what Marshall and Mickie agreeing. But yeah, I mean, I don't look at real estate as liquid investments at all. You're giving it even a little bit more than I would. I'm just hardcore. No, that is not a liquid investment, to your point, because you do have to go through quite the hoops in order to, liquidate that money. Yeah, absolutely. So
right. And as a financial advisor, we're trying to make sure, people aren't like land poor, right? Some people have a lot of value in land, but they can't pay their bills. They have a hard time going on vacation what we help people do is get the right blend of illiquid, cash and then investments so that they have flexibility. That's what diversification is about, right? All these different types. So
agreed. I could talk about real estate market all day, every day, but we also have some other markets that people may have forgotten about, like the currency market. That's actually a really exciting market. So hear a little bit about that. How would people feel a little bit more in the know about the currency market if they're at an upcoming barbecue this weekend and they want to sound like, hey, I know a lot about this.
You want people to walk away from you?
No, I want them to be like, wow. Mickie knows a lot about currency. Woo.
Exactly. The US dollar versus the euro versus the
peso.
Yuan. What's the yuan?
Yeah. I don't even know.
The Chinese.
Is it?
Chinese currency.
Yeah. Okay.
And so it's interesting, as an investor, sometimes I'll go into the weeds with someone on this if they understand it, but the US has been the reserve currency for the world for about 110 years, 100 years, something like that. The reserve currency, right? Well, you can go back through history and reserve currency status really only lasts about 80, 90 or 100 years over the last 500, 600, 700 years, right? Yeah. At one point it was England. One point it was Portugal. And so maintaining that status, it gives you incredible power around the world if you're the reserve currency. And so there's a lot of stuff, people go into the weeds about, what if China became the reserve currency, or if there was a basket of other currencies to replace the US dollar, right? There are certain countries in the world that would love to knock the US dollar off of that pedestal, right? Iran, Russia, North Korea, they would love that they weren't controlled by that dollar situation. So anyway, currencies, currency things are very scary because everything is residing on these currencies, and they're different changes. I mean, Mickie, you've been to Europe, right? You've been to Europe?
Yeah.
So sometimes the price of the euro changes, and you can get better deals based on that change between the euro and the dollar, right?
Yes. I deal with that with the Mexican peso a lot.
That's right.
Because of those fluctuations too. And sometimes it's better to pay with the American dollar. Sometimes it's better to pay with pesos. Depending.
That's interesting. How much does it swing? What's the range of,
well, right
5%,
now
10%?
right now it's up to about 20, but sometimes it's down in like the 18, 17s, and it's like, oh, yikes. So it can be all over, but right now I haven't checked in the last week. I checked a couple weeks ago and it was pretty good.
Yeah.
Pretty solid it was pretty solid for the US dollar.
Right.
So,
Right.
For the port.
So I guess we should fully disclose that you are an international real estate investor.
I am. What can I say? Yeah. Ooh.
You and your husband own a place in Mexico, right?
We do. Yeah.
That's cool.
So real quick, for those people who are interested in investing in real estate and you want to get into it a little bit, just briefly, what we do is we buy live-in fixers, and we get in, we fix them up, and then we sell them. We move on to the next one and the next one. If we buy new, we buy first phase, maybe second phase, and then we sell it and move on. But we always look for fixers for the most part, and It's fun. It's
That's
fun.
cool.
So yeah, it's done well for us. So anyway.
Yep. So is that all the markets that people want to know about?
No, you know what they're really wanting. They want to know about the stock market, and they want to be in the know. So for those people who are like, "Oh, I don't really know a whole lot about it," what's the skinny on it?
The skinny. Well, it is the market everyone talks about. And when they ask me about the market, when they ask me, I know that's what they're talking about.
Yeah.
But then there's actually detail about that. What are they saying? So typically they're asking about the S&P 500, and that's the 500 largest stocks in the US stock market. And so that includes all the big names, right? Apple and Amazon and Nike and everything, the big names are there. But the reality is there are almost 4,000 stocks in the US market. So when you talk about the S&P, you're only talking about 500. And so a lot of the big growers, a lot of the future 500 names are in that other 3,500 stocks. And so that's an important area to pay attention to. And then when they asked about the stock market, are you talking about the US or are you talking about international? Right? So there's 4,000 stocks in the US publicly traded. There's actually 12,000 stocks internationally. Right? And then you start drilling down into that international stocks. Are we talking about Europe? Mm-hmm. We're talking about Japan, Australia. I mean, what are we talking about? So there's lots of ways to dig down into the stock market and find ways to invest there. And it's just fascinating. I find it very interesting. It's something I've been interested in for a long time, reading about it. And one of my mentors, one of the guys I read about and studied when I was young, is a guy named John Templeton, Sir John Templeton. And he created the first international mutual fund in the 1950s. And he did amazingly well, became a billionaire, born and raised in Tennessee. And I just admire his career and life. But he was the first one that brought the idea of international investing to the mutual fund investor. So you could buy one mutual fund and it had all these international stocks in it. So you didn't have to go to Europe and Asia and all these places to pick. He had people there picking stocks and putting them into a fund for you. So it's a much easier now than it was years ago, but still, sometimes Europe's not doing well, and sometimes you want to be in Japan versus other places in the Far East. So it's interesting. There's always things to be reading on, for sure.
That is why, in my humble opinion, you need an investment advisor like yourself, because I don't have that kind of time to be keeping an eye on all of that. And I know that you do every single day. And I'm so grateful that you do that for our clients, because it's a lot. There's a lot with all these different markets. And, so that's a good reason to have an investment advisor.
Well, I enjoy it. They say find something you love and you'll never work a day in your life, right? And so I enjoy it, believe it or not. Even when I had a real job, I have a real job now, but when I had a real job
now.
I have a real job now, I know.
It's just fun.
I would read about this, be commuting and reading and studying and reading about how this works, reading about Warren Buffett back in the day and reading Random Walk Down Wall Street. That's a famous money. And the concept of that book is a monkey throwing darts at the newspaper to pick stocks does better than most people. That's
hysterical, but probably true, right?
Probably true, right? So anyway, but I enjoy it. Thanks for the shout out.
Absolutely. Well, I want to encourage everyone to reach out to us for this really handy dandy market cheat sheet. It has a lot of quickie, just quick information there for you, so that you can just really take a quick glance at it, and you'll be in the know before the next barbecue, so that when market talk comes up, you'll know exactly what to say, and people will be like, oh, wow, you're really in the know. So reach out to us at clarionadvisors.com/contact and just type in market cheat sheet and we'll send you the PDF. All right.
Thanks so much.
Yeah.
Thanks, Mickie. This has been fun.
You bet, Marshall. It's been great. And we will bring many more of these to all of you in the future. So stay tuned, and thanks for joining us today. Bye now.